Picture this. You just finished a World Bank-funded project. You've paid your taxes year after year. Then suddenly, URA says you owe over 400 million shillings. That's exactly what happened to John Livingstone Okello Okello, a Ugandan surveyor and a member of parliament. His fight with the Uganda Revenue Authority became a landmark case. And today, I'll show you why it matters for every business in Uganda. John Livingstone Okello Okello wasn't just any taxpayer. He was a professional surveyor with years of experience and also served as a member of parliament for Chua County in Kigum District. Between 2003 and 2008, he worked under a World Bank-funded project through the Ministry of Local Government. His job was to prepare property valuation rolls and rating lists for local councils, work that directly supported Uganda's decentralization and local revenue collection efforts. Okello often subcontracted other surveyors, assistants, and even legal advisors to help him complete the work. These were paid on a commission basis, and the payments ended when each job ended. He filed annual returns, declared his income, and paid the taxes assessed on him at the time. But in 2009, the Uganda Revenue Authority stepped in. URA, created in 1991 as part of economic reforms, had already built a reputation for tough enforcement. They launched what they called a comprehensive audit into Okello's affairs, covering the years 2003 to 2008. The audit wasn't conducted at his office, but internally at URA headquarters, without his participation. The initial outcome was shocking. URA issued assessments totaling over 435 million shillings in income tax and VAT. For context, at that time this amount was enough to bankrupt most professionals. And because Okello was a sitting MP, it became a matter of public interest. Over the next few years, URA amended these assessments at least 7 times, reducing and revising figures as Okello objected and provided documentation. By the time the case reached court, the liability had shrunk to about 32 million shillings in income tax. The VAT portion was conceded by URA as being the responsibility of the Ministry of Local Government. The pressure of this dispute wasn't just financial. Okello claimed the timing of URA's actions was politically motivated and that opponents used the tax case as a weapon against him during campaigns, telling voters he risked arrest over unpaid taxes. This tug-of-war between an individual taxpayer and Uganda's powerful tax authority set the stage for a landmark judgment.
The relentless pressure from the Uganda Revenue Authority was not about taxes. It was politically motivated, a desperate attempt by my opponents to silence me. They weaponized false tax claims in their smear campaign. But I will not be pulled down. This is a fight for justice.
Key legal disputes. 1. VAT liability. URA included VAT in Okello's liability. But under the VAT Act, Cap 349, Section 5, the taxable person was the Ministry of Local Government, not him. The court agreed and disallowed URA's claim. Lesson: VAT must be charged by the supplier of taxable services and paid by the actual contracting party. 2. Time-barred income tax reassessments. URA issued multiple amended assessments, but the Income Tax Act, Cap 340, Section 96(5), limits reassessments to 3 years unless fraud or gross negligence is proven. The court found some reassessments were late and therefore invalid. Lesson: businesses should know these timelines. URA cannot reassess indefinitely. 3. Are travel and commission payments deductible? URA disallowed major expenses, travel costs, commissions, and legal fees. But Section 22 of the Income Tax Act allows deductions for expenses wholly and exclusively incurred in the production of income. The court approved most of Okello's expenses, confirming this principle. 4. Withholding tax obligations. Okello paid professionals but failed to withhold tax as required by Section 119 of the Income Tax Act. The law is clear. The payer must deduct withholding tax at 6% or 10%, depending on service. Failure attracts penalties. Under Section 137, That means the tax plus interest at 2% per month and possible fines. The court held him liable on this point. Precedents and broader lessons in Uganda. Okello's case wasn't unique. Heritage Oil and Gas Ltd v. URA 2011 URA pursued over $400 million in capital gains tax after the sale of oil interests. The case confirmed Uganda's right to tax such deals, warning investors to be cautious. BAT Uganda Ltd v. URA 2008 disputes over excise duty highlighted the dangers of inconsistent tax enforcement. Tax Procedures Code Act 2014 streamlined penalties and interest rules, but also expanded URA's enforcement powers. These precedents remind us, in Uganda, documentation and legal awareness are not optional. They're survival tools. Conclusion. So, what's the big lesson from Okello's case? URA overstepped with arbitrary and late assessments. But Okello also failed in his duty to withhold tax. The court balanced the scales. For businesses and investors, the lesson is clear. Know the law, respect the deadlines, and keep your paperwork safe. Because in Uganda, a tax dispute isn't just about money. It's about compliance, reputation, and survival. Now it's your turn. Was Okello unfairly targeted? Or was URA simply doing its job? Drop your thoughts in the comments. And don't forget to like, subscribe, and hit that bell. More Ugandan business lessons are on the way.